Welcome to the Daily Fortune, where we talk about the latest topics about finance and investment. But before that, please don't forget to click the like button, subscribe, and hit the notification bell so you'll know when we upload a new video. Now let's get started. Who would not want to listen if the wealthiest man on the planet had shared his thoughts about finance? Most people would be curious and would like to listen, right? Elon Musk's tweet about his prediction on the future of the US economy and the world was taken by storm. A few days ago, Christopher Mims, an American columnist, posted a list of 936 unicorn businesses. These unicorn businesses are companies valued at over $1 billion. In a tweet by Christopher, he said that there are 936 startups valued at more than $1 billion in the world today. What do we think this chart looks like in, say, 5 years? Elon Musk replied to Chris' tweet by saying, "If history is any guide, not many will make it past the next recession." One Twitter user joined in the tweets with a burning question of the day: when do you think the next recession will be? So Elon responded, "Predicting macroeconomics is challenging to say the least. My gut feeling is maybe around spring or summer 2022, but not later than 2023. Elon didn't explain further why he believes this, and whether this will be a severe recession or just an ordinary occurrence. On the other hand, according to the Chief of Investment Officer for the Lethold Group, Doug Ramsey, when the S&P 500 closed at a 52-week high last week, 334 companies trading on the New York Stock Exchange hit a 52-week low, more than double the amount that marked new one-year highs. This has happened only 3 times in history, all of them in December 1999. This indicates that the stock market in the United States is at an all-time high, because there aren't enough new funds outside of the stock market. US stock funds have gathered in the pools of a few major businesses, implying that other companies' valuations are low. Essentially, financing has become much more difficult. Also, the Federal Reserve's monetary policy is conservative, and this means that the tight liquidity situation is increasing. Another Twitter user, Chris Smithson, believes that the rate of inflation in the United States has reached record highs. The fact that the prices of products in retail establishments he's noticed have been growing in the last 6 months is an evident clue. Whether there will be a financial catastrophe in the following stage depends on the Federal Reserve's ability to effectively withdraw from its quantitative easing monetary policy. This isn't the first time Elon Musk has predicted economic doom. Not long ago, the Tesla CEO was involved in a series of highly publicized tweets with leading Democratic politicians, including one with Senator Bernie Sanders, in which he called the senator a taker, not a maker, and made a joke about his older age. Elon also made various comments about the impact of the government deficit on inflation and the federal government's failure to regulate expenditures. Here's another one of Elon's tweets, and he said, "Inflation is the most aggressive tax of all. Regressive taxation refers to low-income segments of the population paying a higher percentage of their income to tax authorities than wealthier people pay. People with bigger incomes pay higher tax rates in the US." Elon Musk's point is that inflation eats away at people's money, particularly those fixed on incomes like retirees. Wealthy people, on the other hand, are largely unaffected by inflation since they have stock portfolios that appreciate in value. The super rich are also better positioned to demand higher wages and counterbalance rising prices. Elon Musk isn't the only prophet of doom in the tech world. Jack Dorsey, co-founder and former CEO of Twitter, is also concerned about several big challenges confronting the US economy. In October 2021, he tweeted, "Hyperinflation is going to change everything. It is happening." Jack added on his tweet, "It will happen in the US soon, and so the world." As you might expect, hyperinflation is accelerated inflation at an extremely high level. As of 2018, researchers had recorded 57 incidents of hyperinflation, with the first one occurring between 1795 and 1796 in post-revolutionary France. Some analysts and writers have looked at possible hyperinflation in the United States as early as March of 2021, when the economy began to recover after an artificially depressed year due to the COVID-19 pandemic that led to lockdowns and a lot of restrictions. The word hyperinflation brings back a dark picture, with Venezuela being the most recent example. Zimbabwe is also one of the most well-known examples. Yes, hyperinflation is a real thing. Central banks released new currency notes with much more zeros, similar to the way people cart around stacks of money on wheelbarrows. People rush to the cash register to buy food before prices rise again, depleting their retirement accounts. It's really a societal tragedy, an extreme nightmare. In that case, it's a good thing that many financial sites and respected experts were quick to criticize Jack Dorsey's take on the economy. Cathie Wood, CEO of ARK Invest, rebutted Jack Dorsey's claim on Twitter when she said, "In 2008 to 2009, when the Fed started quantitative easing, I thought that inflation would take off. I was wrong. Instead, velocity, the rate at which money turns over per year, declined, taking away its inflationary sting. Velocity is still falling." Kathy stated in a Twitter thread that due to three sources of deflation, price hikes affecting consumers should drop after the holiday season. The first source, according to her, is technology-enabled innovation. An example is artificial intelligence. She also mentioned the costs of AI training are reducing by 40 to 70% per year, which she described as record-breaking deflationary force. She also said, when costs and prices decline, velocity and disinflation, if not deflation, if consumers and businesses believe that practices will fall in the future, they'll wait to buy goods and services, pushing the velocity of money down. Then moving on to the second source of deflation, according to Kathy, it's creative destruction as a result of the disruptive innovation. She said, since the tech and telecom bust and the global financial crisis in 2008, many companies have catered to short-term oriented shareholders who want profits or dividends now. They leverage their balance sheets to pay dividends and buy back shares, manufacturing earnings per share. They've not invested enough in innovation and will probably be forced to service their debts by selling increasingly obsolete goods at discounts. Deflation. Here's the third source according to Kathy Wood. The over-ordering and stockpiling of goods as a result of the COVID-19 epidemic and supply chain issues. Wood shared in a tweet, because businesses shut down and were caught flat-footed as goods consumption took off during the coronavirus crisis, they're still scrambling to catch up, probably double and triple ordering beyond their needs. As a result, once the holiday season is over and businesses are left with extra supplies, prices should fall. Kathy Wood pointed out that commodity prices like lumber and iron ore have already decreased by half, and the price of oil remains psychologically significant. She pointed out that global oil demand in 2021 would be lower than in 2019, and unlikely to return to previous highs, in part because the price had broken a string of lower highs and was now above the $77 mark, destroying demand. Wood continued to stress in the thread that this wasn't the end, and she said, on the supply side, environmental, social, and governance mandates have forced energy companies to shift spending from mature fossil fuels to renewables. Meanwhile, banks have deprived tracking companies of funding after their near-death experience in 2020. Kathy Wood finished her tweet by saying, in response to the near quadrupling of oil prices since the low last year, electric vehicle adoption has accelerated, sowing the seeds of a serious oil price decline longer term. Then Elon Musk responded to Wood's tweet and said, I don't know about long term, but short term, we are seeing strong inflationary pressure. Elon Musk isn't the only billionaire concerned about rising prices. When Yahoo Finance editor-in-chief asked Ray Dalio, the legendary hedge fund manager, how concerned he was about inflation, the billionaire believes it's only a matter of time before inflation affects the American economy. And he also responded, I'm significantly concerned about it. Because of the amount of money and credit that has to be produced and is budgeted, it's a large increase. Ray Dalio, the founder of Bridgewater Associates, the world's largest hedge fund, has been warning everyone about rising inflation. In November 2021, when an inflation report revealed that customer prices had increased by the most in almost 3 decades, he was louder than ever. In a LinkedIn post following that report, Dalio cautioned that raging inflation was destroying the wealth of Americans, and he wrote, some people make the mistake of thinking they're getting richer because they're seeing their assets go up in price, without seeing how their buying power is being eroded. The ones hurt the most are those who have their money in cash. In one of Dalio's posts, he quoted a chapter from his new book, Principles for Dealing with the Changing World Order, in which he stated that a country's wealth decline is frequently accompanied by diminished power. Dalio wrote, there isn't an individual, organization, country, or empire that hasn't failed when it lost its buying power. To be successful, one must earn an amount that is at least equal to the amount one spends. I've studied these empires, these dynasties, going back over 500 years, and you see the same thing happening over and over again. When there is a financial problem and the coffers are empty, they print money, and when they print money, it devalues money. The billionaire hedge fund manager already warned us that printing too much money without raising its productivity levels results in what I have mentioned above. So what are your thoughts on the US financial situation this 2022 and beyond? Are you with Team Elon Musk and Ray Dalio? Or are you siding with Kathy Wood's prediction? Maybe leave your answers in the comment section below who you believe in. And thanks again for watching this video. So that's it for today. I hope you learned something from today's video. And to get updated with the next videos, don't forget to hit the notification bell. See you next time.